stop whatever you're doing. I don't care if you're driving, at the gym, watching this on the toilet, or pretending to work while your boss is stuck in a meeting. This matters. Today is Friday, January 23rd, 2026, and gold just closed out its best week since March 2020. We're talking almost 8% up in 5 days. All-time high at $4,966 an ounce. Silver just touched $100 for the first time in human history. COMEX silver inventories, that's the New York Commodities Exchange, have dropped 70% since 2020. In a single week of January, 33 million ounces were pulled out. 26% of the registered inventory, gone, in 7 days. Platinum is also at all-time highs. Every precious metal, all at once. And if you turn on the TV, you know what they'll tell you? Safe haven, geopolitical uncertainty, investors seeking protection. The easy explanation, the one that fits in a headline, the one that doesn't require anyone to actually understand anything. But that doesn't explain a 77% surge in 12 months. That's not fear, that's something else entirely. I'm Carter, I've been doing this for over a decade, and what I'm about to tell you today is probably the most important thing I've ever explained on this channel. Yeah, I know that sounds dramatic. I know every YouTuber says their video is the most important one. But this time, the data is so insane, I don't have a choice. And it's not just me saying it, the internet conspiracy guy rambling about precious metals. The numbers say it. The market says it. Central banks say it with their actions, not their words. There's one piece of data that changes everything. One number that, once you see it, you'll understand exactly why gold is doing what it's doing. We'll get there. But first, you need to understand what happened this week. Because this isn't about what the news is telling you. This is about what's happening behind the curtain. Look, this week they announced a 25% tariff on any country that trades with Iran. And yeah, I see the eye rolls. Carter, are you seriously going to talk politics? No. This isn't about politics. Iran is the excuse, the catalyst. This is about what happens when access to the global financial system becomes conditional. When they can cut you off from the dollar not because of what you did, but because of who you trade with. Think about it. China buys 89% of Iranian oil, India trades with Iran, Turkey trades with Iran, the Emirates trade with Iran. Suddenly, all these countries get the same message. Your access to the global financial system depends on you behaving, on trading with whoever we allow. And what do they do when they get that message? Sit around and wait? No. They look for the emergency exit, and gold is that door. But before I explain how that exit works, let me tell you what's happening with silver, because it's absolutely insane and nobody's connecting it to gold. On the COMEX, there's something called the paper-to-physical ratio. Basically, how many ounces of silver have been promised in paper contracts for every ounce that actually exists in the vaults. You know what that ratio is right now? 356 to 1. For every real ounce of silver, there are 356 ounces promised on paper. It's like a hotel selling 356 reservations for the same room. 355 guests are sleeping in the parking lot, and the market knows it. That's why JP Morgan and Citi, the same banks that spent years shorting silver, betting it would drop, are suddenly demanding massive physical delivery. They switched sides. They want the real metal, not the paper, not the promise, the metal. Wonder why. And here's where it gets really crazy. In Japan and the UAE, physical silver has been selling at an 80% premium over the COMEX price. $130 an ounce when the official price was $72. 80% gap between what the paper says and what the actual metal costs. That's a broken market. That's the paper system and physical reality getting divorced in real time. And meanwhile, China just restricted silver exports starting January 1st. Only 44 companies in the entire country are licensed to export it. They've classified silver as a strategic material, like rare earths. And China produces 60 to 70% of the refined silver traded globally. This isn't normal commerce. This is economic resource warfare. The same day gold breaks records, silver is screaming that the whole paper promise system is falling apart. All right, now here's the number I promised you, the number that explains why all of this is happening. The dollar's share of global central bank reserves has dropped to 56.32%, the lowest since 1994, over 30 years ago. In 2017, it was at 64%, Almost 8 points down in 8 years, 1 point per year, every year, without fail. But here's the big one. While the dollar falls, what's rising? Gold has gone from 10 to 23% of reserves. And for the first time in history, the value of gold held by foreign central banks nearly equals the value of U.S. treasuries they hold, close to $4 trillion in gold and close to $4 trillion in treasuries. Tied. The asset that's propped up American financial power since Bretton Woods now has direct competition, and that competition is a yellow metal that's been money for 5,000 years. Why is this happening? Let me break it down. The U.S. has spent decades weaponizing the dollar. Sanctions on Iran, sanctions on Venezuela, sanctions on Russia, on anyone who misbehaves. It's the favorite hammer. And when all you have is a hammer, everything looks like a nail. I'm not getting into whether it's right or wrong. That's politics, and we're here to talk markets. What I care about is the effect. In 2022, when they froze Russia's assets, $300 billion, overnight, every central bank on the planet thought the same thing. If they can do that to a nuclear superpower, they can do it to me. That was the turning point. Since then, countries don't wait to get sanctioned. They build the exit before there's a fire. It's like having fire insurance. Doesn't mean you expect your house to burn down, just means you're not an idiot. And here's the part that doesn't make the news. The part that blew my mind. China isn't building an alternative to the dollar. They already have one running. It's called CIPS. The Cross-Border Interbank Payment System. 1,683 participants, banks from 124 countries. It's processed over $94 trillion cumulative, trillion with a T, and it's growing 65% year over year. But there's more. There's a project called mBridge, a central bank digital currency payment system. It's grown 2,500 times since 2022. Not 2,500%, 2,500 times, and 95% of settlements are in digital yuan. It has capacity to cover 38% of global trade if they activate all connections with ASEAN and the Middle East. And now here's something really interesting. The Bank for International Settlements, the BIS, which is basically the central bank of central banks, the VIP club of the financial elite, was participating in Bridge, was because they just pulled out. Why? To build a rival Western system. Read between the lines. If they're abandoning the Chinese project to create their own alternative, it means they no longer see it as some experimental toy. They see it as real competition, as a threat. The people running the system are scared. And when the people in charge get scared, you should be paying very close attention. Last June, the Shanghai Gold Exchange opened its first physical gold depository outside mainland China, in Hong Kong. Yuan-denominated contracts, physical gold settlement, operated by Bank of China. This very week, they're signing an agreement to expand it, and the stat that stopped me cold. In a pilot program between Hong Kong and Abu Dhabi, an international transfer settled in 7 seconds. 7 seconds. With a 98% reduction in fees, Middle Eastern traders already using the system report 75% lower costs. You know how long SWIFT takes? 3 to 5 days. Sometimes longer if there's a holiday or someone needs to manually review something. We're talking about a near-instant system, practically free, that doesn't go through New York. This is already working, already operational, while the news keeps telling you about safe havens. It's like there's a fire in the building next door and the evening news says people are going outside because the weather's nice. Technically, they're going outside, but the reason is different. And China already has swap lines open with 32 countries, direct currency exchange without going through the dollar. Know which countries? Canada, Australia, Japan, Brazil, Switzerland, Saudi Arabia, the UK. 32 countries that can trade with China without touching a single American dollar. And you know which country isn't on the list? I'll give you a hint. It's shaped like an eagle and loves slapping tariffs on things. The US isn't invited to the party, and the party already started without them. Okay, Carter, but if China has all this set up, why do they need gold? Why not just use the yuan? Great question. The answer is trust. Or more precisely, the lack of it. Nobody trusts leaving their money in a system Beijing controls. China doesn't have open capital markets. The yuan isn't freely convertible. If Xi Jinping decides tomorrow that your money stays in China, it stays. and there's no court to appeal to. So no serious central bank is going to park their national reserves in yuan and cross their fingers. A BRICS currency? Please. Putin couldn't even attend the summit in South Africa because they were going to arrest him. These are the people who are supposedly going to coordinate a common currency. It's like a group chat where nobody responds and everyone has notifications muted. But gold is different. No counterparty risk, no government prints it, can't freeze it with a click, it's neutral by nature. And here's something important I want you to understand. China isn't trying to replace the dollar, that's what the media says. But it's not true. What China wants to replace is treasuries, U.S. Treasury bonds. The default reserve asset, that's the real play. They use the yuan for day-to-day liquidity to move goods around, but for final settlement, for the reserves that underpin the system, they use gold. A payment system with physical backing, no trust required. If you have the gold, you have the value, period. Look at central bank purchase data. 634 tons of gold bought in 2025 alone. 3 straight years buying over 1,000 tons annually, double the historical average. Poland leads with 95 tons and announced this week they're buying another 150. Their target, 30% of reserves in gold. China has been buying for 11 consecutive months. Brazil started buying again after years on the sidelines. 95% of surveyed central banks expect gold reserves to increase this year. These are the people managing nations' money, the ones with information you and I don't have. If they're getting out of the dollar and into gold, they know something. And while all this is happening, this week we also learned another little thing. The Department of Justice opened a criminal investigation into the Federal Reserve Chair, into Jerome Powell. The official excuse is something about a building renovation that cost $2.5 billion, a criminal investigation over construction work. Like getting a speeding ticket for doing 45 in a 44 zone, totally legit. I'm not going to speculate what's really behind it, but when you investigate the head of the most important central bank in the world, you're sending a message: the Fed's independence is on the line. The rules can change. And what did gold do that day? All-time high. The market doesn't believe in coincidences. Now, look at what the investment banks are saying. Goldman Sachs raised their target to $5,400. Citi says $5,000 in 3 months. JP Morgan calls for $5,055 by Q4, all bullish. And not because they've turned into YouTube conspiracy theorists like me, it's because they see the numbers. US debt is over $36 trillion, and here's a stat that should keep you up at night. The interest on that debt, just the interest now, exceeds $1.2 trillion a year, $1 trillion a year just to pay interest, without reducing a single cent of principal. And who's buying that debt? Fewer and fewer foreigners. Foreign holders used to own 50% of US debt, now they own 30%. China has reduced its treasury holdings to $689 billion, the lowest since 2008. India selling. Brazil selling. The BRICS selling. And who's buying? Domestic investors, American pension funds, local banks. It's like the rest of the world is handing back the IOUs, saying thanks but no thanks. As Ray Dalio says, the biggest risk with treasuries isn't default, it's devaluation. They give you your money back, but that money doesn't buy anything. Now let's be fair for a moment. The counter-argument exists. The dollar is still 88% of currency transactions. The treasury market is still the most liquid in the world. China has massive problems. Real estate in shambles, weak growth, capital flight. The yuan is only 3% of SWIFT. And yes, the CME had to raise silver margins to 9.9% to curb speculation, just like they did in 1980 with the Hunt brothers. Some of this is momentum and algorithms. All of that is true, but the question isn't where we are today. It's where we're headed. A falling plane is still in the air. That doesn't mean everything's fine. And that brings us to what actually matters. What does this mean for you? I'm going to dial it back because this is important. I'm not telling you what to do with your money. That would be illegal and stupid because I don't know your situation. What I do is tell you what's happening and what I'm doing with mine. But think about this. I'm not saying it to scare you. I'm saying it so you protect what's yours. I've got a family too. I've got savings too. That fund you have at the bank, do you know what's in it? Probably bonds. Fixed income that isn't so fixed when inflation eats the yield. Assets that depend on the system working the way it has for the last 50 years. What if it doesn't? Gold is up 77% in a year. Gold miners up over 120%. Silver has nearly tripled. Some people have been positioned for years. They weathered the mockery, the memes about boomers hoarding bars, and now they're watching their thesis play out. The question is whether you're going to be one of the people who see it coming or one of the people watching it in the rearview mirror. I'm not saying sell everything and buy bullion. Don't be ridiculous. I'm saying do your research, look at these numbers, think for yourself, don't even trust me. The window to get positioned before it becomes obvious is closing. Every week it gets narrower. So let's recap. Gold isn't going up because of temporary fear. It's going up because the people who move the world's money are building an alternative system where the dollar is no longer the referee. This week's record isn't panic. It's information. It's the market screaming something the news anchors don't know how to translate. Silver trading at 80% premiums in the physical market isn't a bubble. It's paper disconnecting from reality. Central banks aren't buying gold because they're nostalgic boomers. They're buying because they understand this system has an expiration date, and they're grabbing their exit tickets before they sell out. And when a country leaves the dollar system when they already have their alternative running, their swap lines, their gold reserves, their payment systems, they don't come back. The cost of returning outweighs the cost of staying out. It's like a divorce. Once the papers are signed, you don't get back with your ex because tensions ease up. The capital that leaves isn't coming back when the headlines change. This isn't cyclical. It's not a 6-month correction. It's structural. It's a changing of the guard. The end of one system and the beginning of another. On this channel, we've been talking about this for years. Gold, de-dollarization, what central banks are doing while they tell you a different story. They called us crazy. Boomers. Tinfoil hat conspiracy nuts who don't understand modern economics. And today those same analysts are saying exactly what we were saying 3 years ago. Those same banks that laughed are now recommending gold to their wealthy clients. Those institutions that called gold a relic of the past are now stacking it as fast as they can. You decide which side you want to be on. The side that sees things coming, or the side that's always late to the party. Resets don't send warning letters. You don't get an email saying, get ready. They just happen. And by the time everyone sees it, it's already too late. Take care of yourself, protect what's yours, and I'll see you in the next one.